Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories we're following for you in the BNN Bloomberg newsroom. Canada is working on a comprehensive deal with India to boost trade and investment. This comes as Indian Commerce and Industry Minister Piyush Goyal is in the midst of a three-day visit. Goyal met with Prime Minister Mark Carney in the efforts to strengthen bilateral ties. Carney says a deal with India would be a game changer for Canadian businesses and workers. The two sides say they hope to conclude a deal by the end of the year. The combined federal and provincial debt is expected to reach $2.4 trillion, according to the Fraser Institute. Debt has grown substantially since the 2008 financial crisis. The study also shows the combined government debt now equals about 75% of the Canadian economy. Manitoba has the highest combined debt share of the economy, and while Alberta's remains the lowest. Bank of Canada External Deputy Governor Nicholas Vincent says Canada needs to rethink its approach to education and training. Speaking in Montreal, Vincent cited the challenges young people are facing in the labor market, noting that they are overrepresented in the unemployment category. He pointed to structural factors, including an influx of young immigrants, a mismatch of skills, and the growth of AI as possible reasons for the situation. And taking a look at the markets, you can see the TSX hovering them around about a half point off, only three indices in the green, and dragging everybody down. Consumer staples and healthcare right now, along with tech, the big losers. South of the border, U.S. markets. The S&P 500 in around record territory, up a half point. Same with the NASDAQ. It's up by nearly a full point at 26,595. As we mentioned, Canada's debt is expected to reach $2.24 trillion. That, according to the Fraser Institute. Joining us now to discuss this and more is Kai Lam, Chief Investment Officer at JCIC Asset Management. And Kai, thanks very much for joining us.
Thank you for having me.
All right, how much of a concern is that $2.4 trillion? It's a big number.
It is a big number, and from my understanding, that 2.4 is actually the net debt, and that is excluding it's including the pension assets and the pension assets from Canada as well as the Quebec. And really the gross number is more closer to 3.7, 3.8 trillion. I mean, I guess if you compare it to other G7 countries, it's not that different, but that doesn't mean it's a low level. So it is something that we have to keep on watching for because it is pretty elevated.
Are we getting into Greece territory, or are we still pretty stable? I mean, I think the Americans have a higher per debt than us, do they not, or close to?
It does have a little bit higher, and so for now it's manageable. But it's something that we have to be aware of how much more it can go up.
And does this play a role when it comes to the governments trying to work on deals and work with other countries? Is this a factor? Does it factor in at all?
I mean, for us, I guess we have to look at how much the government is spending and how much the country is kind of depending on their level of spend and how much more capacity they have to take on more projects and more sources of income. But that said, when it comes through like an equity market perspective, the Canadian equity market is not the same as kind of the government outlook.
All right, and with the tariffs, what kind of an impact is that having, and what kind of challenges is that posing when we're dealing with that debt too?
Yeah, I mean, it's something that we will have to consider. For example, in some areas like steel and aluminum, that's been challenged with the tariffs and has gotten more support from the government. So it is important to support our industries, but it does have an impact in terms of increasing the debt load.
We're going to jump around a little. Well, we're going to jump to something everybody's talking about, AI. Sam Altman saying AI will not replace jobs. I think it's going to eliminate jobs, but will it create jobs? I guess the big thing is, will it create more jobs, like so many other revolutions that we've seen?
I mean, I think the job mix will change. ultimately, I think AI does improve productivity and earnings for companies, and that's positive for the market. Um, I also think that it relieves pressure from, as we grow and you need more labor, it will relieve some of that inflationary pressure on the labor side. But I'm not expecting like that huge kind of layoffs just from AI. But I think it's an area of potential growth.
And is Canada ready for it, do you think?
I think that a lot of the North American companies have been really looking at how to use AI and implement it. So, for example, within Canada, our institutions for the banking system have all been implementing AI, and the feedback's been very positive in terms of their ability to reduce costs and improve productivity of their employees. So, I think there is a significant opportunity there to help support that growth.
All right, I just want to ask about this because the Ferraris are out, the new ones, the EV. Your thoughts on it? It's getting panned, and Ferrari's taking a hit on it.
Yeah, so Ferrari itself is a really good, high quality company, and they have an incredibly strong brand in which the majority of their cars are sold to current Ferrari owners. The stock has been challenged for the past year, though, and part of it is because of a lack of clarity on their EV strategy. And they did, release the details on their Luce, which was outsourced in terms of the design and at a price point of 640,000 US. It looks very different than the traditional view of what a Ferrari is. And so it really remains to be seen if the current client base is going to be open to buying one of those. But right now you can see that the market is really having doubts on that.
All right, and you've ordered two, both in red. Okay, let's talk about some of the one for me, one for you, clearly, right? Okay. Let's talk about some of the stocks that are catching your interest. Advantest out of Japan.
Yeah, so Advantest, obviously AI is driving a lot of demand for semiconductors. And you hear about deals with different manufacturers or designers like NVIDIA, Broadcom, Intel, AMD. But Advantest, what we like about them is they have about 60% market share in testing these chips during the production process. So it doesn't really matter, which company is the one that wins market share or loses market share. They're likely going to be the one that will test it. And as chips get more complicated, they actually need more testing. And they also, it's not just like GPUs and TPUs and ASICs, but they also test memory chips, which are also been really strong.
And are you buying? You own it?
Yeah, we own it. And if there's any weakness, we're a buyer.
All right, Schneider Electric, it's a good solid European company, isn't it?
Yeah, still staying on the AI theme. I mean, Schneider Electric, they are a global leader in energy management, and that's 80% of their business. And that is a long-term trend that we're going to always have to have the most energy efficient factories and office buildings, and but then also data centers. Obviously, the growth in data centers is very strong from the hyperscalers, and that's the strongest part of their business, which is over 20% of the business, and we expect that to continue.
Okay, we're going to sneak in one more here. Waste Connections, local company.
Yeah, so that is a TSX 60 name, and the stock itself hasn't performed all that well in the past year, but we like it here. We think that the valuation is attractive. 80% of their business is not volume dependent on waste volumes, and I think that some of the concerns of the past year should have better visibility and should perform better going forward.
Okay, Kai, we got to wrap it up there, but thanks as always for joining us.
Great, thank you very much.
Kai Lam, Chief Investment Officer at JCIC Asset Management. Up next, we continue to see strength in the U.S. markets as tech fuels the rally. We'll see why the AI boom could fuel economic growth. That's after the break. The S&P and NASDAQ are climbing this morning on hopes the U.S. is close to an agreement with Iran. Earlier, we spoke with Michael Monahan, founder of Founder ETFs, who is optimistic that the AI boom could fuel economic growth, much like the steam engine or the mobile phone did in earlier eras. Here's more of that conversation.
We could look at the steam engine or electricity or the internet, or the one that's most near on investors' minds is the cycle that the iPhone brought. Remember, when the iPhone came out, it collapsed 30 categories from the calculator to the alarm clock. However, it created entire new industries, whether that be ride sharing, food delivery apps, or mobile payments. And so we're very optimistic that it's not a race of humans against AI. It's a race of humans using AI against humans not using AI. And we think that this is going to cause, certainly there will be places where jobs get taken out, but overall it's going to be an increase in abundance, and there'll be new bottlenecks created by AI that will require humans to solve.
And where do you see the jobs disappearing? Where do you see the creativity coming in and jobs being created?
So, certainly jobs that were, lower on the value creation scale, pushing emails around, making PowerPoints, those types of things are all being automated away. But, software development still requires great humans to oversee the automated code that's being written. Certainly anything in the physical world, whether it be stringing cable in a data center, plumbing, all of those continue to be bottlenecks that will require job creation.
And with the war in Iran, how could that derail any of this, or do you feel it won't, even if it continues where we're at right now with the strait being blockaded?
Yeah, geopolitical risk continues to be the biggest unknown. It's not just the inflation and the energy prices, but it's also supply chain impacts. Remember, I think about 30% of helium that's required for making semiconductors comes out of the Middle East. So we need stability there to keep this economy moving and growing on a global basis. It looks like we're going to get peace in the Middle East. It's grinding slower probably than anyone wants, but the tea leaves sort of read that it's in everyone's best interest to get to a good negotiated solution.
All right, and within AI, a couple of names, you're like an Oracle is the first one. Where do you see the strengths of Oracle?
We believe that Oracle is playing in the boring but highly profitable infrastructure side of AI. And I think that's what we're starting to see on multiple read-throughs is it's, Jensen's making GPUs as quickly as he can, but in order to turn those GPUs into token factories, we have to get land sited, we have to get the box built, we have to get them lit and energy put in, and then we can generate the tokens.
And Oracle,
and for that reason, Oracle's focused on that infrastructure side of the business, so we think they're very well positioned.
I was just looking at some of your notes here. Their backlog has quadrupled to over $500 billion.
Yeah, I mean, the backlog is, an order of magnitude more than their sales. So it's really strong backlog. And if we're looking at, sort of stock price performance, people got excited about the build out and then they got a bit concerned. I think there's some spook on the OpenAI growth numbers. But what we're seeing is, if anything, we've got a little bit of a Starbucks situation where OpenAI has Google biting at their heels on kind of the low-cost solution with Gemini being embedded into search for free. And then Claude is absolutely dominating from Anthropic on the high end. And what we're seeing is that if one frontier model provider doesn't want to take capacity, another one will step up. I mean, I think the greatest example of this was, Elon just wasn't using all of Colossus One and instantly leased it for $1.25 billion a month or $15 billion a year to Anthropic. And Oracle saw the same thing. There was a data center, I believe, that OpenAI passed on, and Meta snapped it up within hours or days. So there's such a bottleneck in infrastructure right now. I think Larry sort of, he's had 40 years of seeing around corners. I think he saw around that corner a couple of years ago and really positioned himself well.
And with Ellison, I mean, I think he's 81 or 82. Any concerns age could be a factor, and succession planning?
So, Larry doesn't seem to be slowing down at all. He's 30 years older than I am, and it looks about the same age as me. So he's taking care of himself and he's executing. And from a succession plan perspective, he's built a huge team around him, as you know. But, as far as our fund, our mandate is we only own founders. So if Larry were to ever step down from being the leader of the company, we would have to exit the stock. But we think Larry's probably got another half a decade or decade left in him, and we're really excited about the prospects for Oracle.
All right, another one you're liking, Palantir.
So the numbers at Palantir are just eye-popping, right? So Rule of 40, which is combining revenue growth and margins, 40 is considered highly investable in venture. That's what Sequoia and Andreessen Horowitz would jump all over. Palantir put up 127 Rule of 40 in Q4. They delivered 145 in this most recent quarter. We think there's a lot of upside there. We think we and our investors are going to get paid on that upside. We think it may take a quarter to remember that Alex Karp has an absolutely dedicated and loyal retail shareholder base. We think the shiny object that retail shareholder base is now chasing, the Microns and the SanDisks and the semiconductor ecosystem. So we think it's going to take a quarter or two for the traditional growth institutional investor to come into Palantir. That's the opportunity for us and our investors, but we see that coming over the next couple of quarters.
Qualcomm shares are on the rise as the chipmaker scores a major AI win, striking a big chip deal with TikTok's parent company, ByteDance. More on that after the break. Toronto businesses are bracing for a wave of FIFA World Cup tourists as the city scrambles to finish last-minute preparations. CTV's Heather Wright has more.
Extra TVs are being hung up at Fox & John's, a restaurant and bar in Toronto's Liberty Village.
We're adding TVs basically anywhere we could fit them.
Bar manager Samantha Besteo says World Cup preparations began 6 months ago and include the hiring of additional staff and a new streamlined menu to help serve the packed crowd expected here throughout the tournament.
It's going to be such a fun time here just in the city as a whole, but it comes with a lot of nervousness and we kind of don't know fully what to expect. So we're kind of going into it super excited, positive spirits, kind of ready for anything though.
Liberty Village is used to hosting big crowds. The neighborhood is the unofficial gathering spot for fans of Toronto FC. But the crowds expected during the World Cup will likely eclipse anything this area has seen before. For the roughly 10,000 people who live here, the tournament brings excitement and some trepidation.
It's definitely going to be busy, but I think it'll be fun. It'll be a lot of good vibes.
With 45,000 fans expected to pack Toronto Stadium for each match, in addition to the fan festivals located nearby, the foot traffic through this part of town will be a big boost for businesses.
It's going to be interesting, I guess. There's going to be crowds of people. There's a lot of hype behind it.
Kevin McDougall owns Merci Mon Ami with his wife, a restaurant and catering business. It has survived the economic crisis of 2008 and the COVID pandemic. He says the economic climate right now is just as tough, and the World Cup will be a big help.
So the margins are tighter than they ever were. So something like this definitely will help increase volume, which increase, revenue. So your margins are still tighter, but you're getting more revenue.
So the World Cup kicks off in less than 3 weeks here in Toronto, with the city expecting more than 300,000 visitors over the course of the tournament. Heather Wright, CTV News, Toronto.
Coming up, Canada makes a major play for Arctic sovereignty using Made in Canada energy solutions. Details after the break. Prime Minister Mark Carney says a comprehensive trade deal would be a game changer for Canadian businesses and workers. His comments coming during a 3-day visit to Ottawa by Indian Commerce and Industry Minister Piyush Goyal. The two met to strengthen bilateral ties. Canada and India say they hope to conclude a trade and investment deal by the end of the year. Shares of Curaleaf are seeing a steep decline. The cannabis company is launching a stock split ahead of its planned U.S. stock exchange uplisting. The reverse 1-for-3 split will become effective next week. and will ensure the company meets the share price level criteria. Curaleaf says the rescheduling of medical cannabis in the U.S. has created a potential pathway toward uplisting to a major U.S. exchange. A new report from Equifax Canada says insolvency numbers have hit their highest level since 2009. Equifax says systemic risks persist despite Canadians trying to stay financially disciplined during the economic downturn. 90% of homeowners are choosing insolvency over bankruptcy, with the average non-mortgage debt reaching $43,000. Well, Qualcomm stock is rising as the chip maker has reached an agreement to supply millions of AI data center chips to ByteDance, marking a key step in its push beyond smartphones. The deal could make ByteDance one of Qualcomm's first major AI chip customers and help drive growth in a market dominated by rivals like NVIDIA. Let's get more on this from Ian King from Bloomberg News. Ian, thanks very much for joining us.
You're welcome.
Okay, how significant is this deal? What does it mean?
Yeah, I mean, Qualcomm during earnings said, hey, look, we're making progress in data centers, and this is a key indicator of our ability to diversify. Said we've lined up, some big customers, but said we're not ready to tell you who those customers are right now. Our reporting is identifying, obviously, a very large Chinese customer as one of these big kind of anchor tenants for this new effort by Qualcomm. So this is a big step forward for them.
And do we know how large? Have we heard any details about it?
Well, Qualcomm has an analyst day coming up this summer, which said it will give more information about this push. But frankly, any large data center operator agreeing to use your technology is a huge deal here. This is the kind of volume that you need. This is the kind of endorsement that you need for your engineering capabilities. And this would appear to be what Qualcomm is getting now.
And what does ByteDance plan to use with the chips? Where do they plan to implement them?
Yeah, I mean, like other data center operators, ByteDance is in this massive scramble to get as much capacity as it can. Many of them, including the large US ones, are trying to also do their own technology. So what Qualcomm is going to do for ByteDance, according to our reporting, is actually help them with a sort of internal project to bring that to fruition, to get from the, hey, here's a cool design, to, hey, here's millions of chips that are being manufactured and used in a data center. So this is what we understand is going on for ByteDance here. So this is not only a big thing for Qualcomm, but it's a big step forward for their internal program as well.
And any political concerns with this between Washington and Beijing?
Well, as we know, all US-based chip companies and international ones are facing US government restrictions in terms of the capabilities that they're allowed to supply to Chinese customers. You either have to get permission from the US government, or you have to be supplying products that don't cross a certain threshold in terms of performance. So obviously for this deal to be meaningful, it will have to be negotiating that difficult both technical and political environment.
And assuming it gets through, what kind of an impact does this have on competition for the AI chip industry?
There's huge competition right now. We don't know who's winning and who's losing, apart from obviously NVIDIA is winning very, very big. Everybody else is scrambling to catch up, but there appears to be almost insatiable demand right now. And this would appear to be another example of just how extensive that demand is, that everybody's getting a chance. Everybody is trying out new technology and trying it out in unprecedented volumes.
All right, Ian, we have to wrap it up there, but thanks very much for joining us.
Thank you.
Ian King from Bloomberg News. Well, two Canadian companies are teaming up to solve one of the country's biggest strategic challenges: reliable power and secure connectivity in the Arctic. Telesat and Canadian Strategic Missions Corporation just signed an MOU today. And joining us to break it down for us is Daniel Sachs, Chief Executive Officer of Canadian Strategic Missions Corporation and CSMC. And Daniel, thanks very much for joining us today.
Hey, Roger, great to see you again. Thanks for having me.
A good day for you. What does this MOU mean?
Yeah, look, this is another kind of key foundational piece in us being able to deliver secure, reliable energy to the Arctic for Canada's defense and sovereignty, as well as dual uses. Bringing in and partnering with Telesat is a crucial piece to that. They have an amazing product and feature service in the Lightspeed network, being able to be a secure comms backlink, which we are going to need in delivering Arctic nuclear power.
Now, the MOU, it's a framework for technical discussions, potential pilot activities, coordinated engagement with government and industry. Is there any guarantees of anything going beyond that?
There are no guarantees of anything in life, Roger. I think this is a key first step towards us moving forward these discussions into concrete action. We've been working with Telesat for a little bit here, and I think putting this statement forward is a clear indication to the market. This is also about building infrastructure ahead of the need for the government. We know that the warfighter is going to need power in the Arctic by 2030, and we are trying to do everything we can in order to put those pieces in place as a commercial business. And I think that's what the private sector can really add to Canada's defense and sovereignty, the ability to move fast ahead of requirements, ahead of needs.
And how do you see the two of you working together? How are they going to be interconnected?
Yeah, so first of all, it's an honor to be able to work with Telesat. They're an incredible company, and really kudos to the leadership of Dan Goldberg there. We are going to be delivering nuclear energy systems to the Arctic, distributed across the Arctic, and we've been building cyber secure operational software with NATO under that. That all requires multiple levels of communication backlinks, and of course, satellite communications will play an incredible part in that. So we'll be working to integrate our operational software, our reactor operations with Telesat Lightspeed in order to be able to move that information data securely.
And with Lightspeed, what is so good about it? What do you like about it that you think it'll work so well with you?
Look, I mean, I'm not certainly one to speak to their technical capabilities. I think it's an incredible a system they're developing and moving forward. It's also a secure sovereign network. I mean, we see Lightspeed is clearly the choice for D&D and the Canadian Armed Forces, as well as many of our allies in an emerging sense for communications backbone, satellite communications, and laser links. So we see this as a key integrated piece of infrastructure that we need in building this all out.
And this is really quite a pat on the back for you as well, working with such an established company like Telesat and with the Canadian government.
Yeah, look, we're very grateful. Telesat's willing to take a chance on us here. We have been working for the last several years on delivering nuclear power systems for the Arctic. We have the only D&D contract in the nuclear sector in Canada. And so we've been great to have the support and investment of the Canadian government there, as well as NATO through a number of different platforms. So CSMC is working to deliver these systems as a dual-use technology for defense purposes, industrial purposes in the Arctic, things like ports and mines, as well as indigenous communities. So we are very thankful for the support of federal government, provincial governments, and everything in between.
And how is it going? I think you said 2030 is the hope. Is that ambitious, that time frame?
I mean, it should be ambitious, right? I think we need very strong and aggressive ambition in this country. We need to move on timelines that are relevant. And so we need to move as quickly as is safely possible. We believe this can be done to deploy at fleet scale, at least a number of sites by 2030. And that's what we're aggressively pushing to do. I think it is a key pillar. If you look at some of the goals and ambitions that the federal government, Carney's government, has talked about, building ports, infrastructure, defense infrastructure in the Arctic, that all requires energy. Talk to anyone who knows energy in the area. It's not going to come from diesel. We have maxed out our ability to bring diesel into the Arctic. There's a number of environmental challenges and everything else with it. The solution is nuclear. So Minister Hodgson said it a couple of weeks ago that the solution is nuclear for the Arctic. This is how Canada is going, and we are just building that as quickly as we can as a private company, raising capital, hiring people, and building capabilities.
You're raising capital. Do you see an IPO in the future?
I think you have to look at all liquidity options at every point along the way. So, yeah, I see that as an opportunity in the future. Can't really say when at this point in time, but it's definitely something that's somewhere on the radar.
All right, Daniel, thanks very much for joining us today. Appreciate it. Good to see you.
Thank you very much for having me.
All right, Daniel Sachs, Chief Executive Officer of Canadian Strategic Missions Corporation. Coming up, 3 big Canadian banks will report earnings tomorrow. When we come back, we'll get a preview of what to expect. Stay with us. Second quarter Canadian bank earnings get underway tomorrow, starting with BMO and Scotiabank. Valuations now surpass their U.S. peers, but is the setup that much better for Canadian banks? We got perspective from Matthew Lee, equity research analyst at Canaccord Genuity.
We're in a situation where capital market is excellent, credit is relatively benign but not improving. Loan growth is still slow, but I mean, overall operating leverage is positive. So what you're getting is, on top of buybacks, a lot of earnings growth.
What do you see as the main drivers here for the potential earnings growth that we could see coming out this week?
Yeah, I mean, I think the number one thing you have to think about is capital markets, right? A lot of this has been talked about geopolitical oscillations. That helps trading revenues. That creates a lot of movement in the markets. The other side of that too is investment banking. Over the last year and a half, we've had a lot of people sit on their hands and wait to do transactions because they weren't sure about tariffs, they weren't sure about geopolitics. I think there's a lot more demand for M&A, a lot of demand for raising equities. So you're seeing both those businesses thrive. Wealth management as well has been a very strong part of the business. Obviously, equity markets have been constructive overall. That does help with AUM and AUM growth.
When it comes to M&A expansions in general, do you think Canadian banks should prioritize expanding their U.S. operations over other international markets?
Yeah, it's a great question. I would say that overall M&A is probably out of favor right now. There's a great focus on ROE, return on equity in the Canadian banks, and I think that's a great thing for that to be occurring right now. ROE is fundamentally a basis of allowing for better profitability. So, to have better ROE is always an improvement. What I'd say right now is, in terms of expansion, there is definitely a better economic environment in the U.S. versus some of the other international businesses that these banks have. That being said, I don't think I'm necessarily pushing for additional M&A.
To what extent is the ongoing conflict in the Middle East a factor here? Is it a key driver of credit provisioning for banks moving forward?
I think so. And I think specifically those that have international exposure outside of the United States. So if I think about global economies that are both maybe lower GDP per capita and import fuel, so, Chile for BNS or Cambodia for national, those places are probably a little more challenged. And it's going to happen in 2 phases, right? First, it's going to be credit and provisioning, to your point, but also loan growth, right? Loan growth will be slower if the consumer is more pinched and corporations don't want to invest.
Yeah. Okay. So I do want to go through the banks and get your expectations for each of them. So you've got Bank of Montreal at a buy at the moment. What do you expect from earnings results from BMO?
Yeah, I think, all the banks across the board, I'm expecting earnings to be strong. Again, back to capital markets, right? But I think with BMO specifically, what we're looking for is more color on their ROE trajectory. BMO's great story right now is that they're going to have this 15% ROE bridge by the end of 2027 and into 2028. If you think about ROE exiting 2025, it was around 12%. So that's a huge amount of earnings growth just from kind of blocking and tackling and doing the right things. So we're interested in hearing more about that.
Bank of Nova Scotia is the next one. You've got this at a hold at the moment. Yeah. What about Bank of Nova Scotia? Anything stand out to you?
Yeah, I mean, look, BNS has executed well as well, but I think the international exposure, like I talked about before, that's a big risk at this point, right? Not that it's going to necessarily blow up, but the fact of the matter is that you have to be more cautious when you think about BNS, just because that international exposure, could be a challenge.
Canadian Imperial Bank of Commerce, you've got that one at a hold too?
Yeah, I mean, I like CIBC. I like what they've done. I think in the personal bank and the commercial bank specifically, they've done a very good job. My challenge with CIBC is more on valuation versus growth, right? So I think, where do you find that next leg of growth for CIBC? Where do you, find that next ability to push up revenue, push up earnings? I think that's the question for CIBC.
Next up is National Bank. So you've got this one at a hold as well.
Yeah, I mean, National Bank's very expensive, and for a good reason. They've done very well in trading. They've done very well in wealth. I would say that the two markets they're most exposed to, Quebec and Alberta, are both very strong. So, the fundamentals for National are good, but it is very expensive. It's the most expensive of the 6 Canadian banks, and to me, that gives me a bit of pause.
Royal Bank of Canada, what do you think? You've got this one at a buy.
Yeah, I do. And, Royal has always been a premium valuation for premium ROE story. It's going to be. And frankly, I think that their exposure to the U.S. on the capital market side gives them a leg up even against the peers in Canada. That being said, I think that they have to figure out another way to add an additional leg of ROE. That's the question for Royal.
And then last up is TD. You've also got that at a buy.
Yeah, I mean, I really like TD. I think they're executing well. They went through a lot of trouble with the AML a couple of years ago. They came out of that, and they've been repositioning their U.S. book. They've been doing a really good job with managing the Canadian bank. I talked about this last quarter too, but they have a massive retail footprint, right? And converting that retail footprint to wealth relationships, to commercial banking relationships, to deposits, to loans. I just think TD is in an advantage position in that front.
It's interesting, like when you look at all 6 of these banks, there's really not that much that's different about them, right? Is there ever going to be a time when we start to see some kind of gaining ground or seeing more growth than others within the category of the 6 big ones in Canada?
I mean, I would push back on that. I'd say that there is quite a bit of difference between them, in terms of how they're positioned from earnings perspective, right? Like U.S. exposure is a big difference. I mean, BMO and TD have large U.S. exposures. BNS is their international outside of the U.S., right? That's a big difference. And, the U.S. business isn't a small piece. For BMO, it's 30% of earnings. So, there is differentiation, but I would agree with you that the core business, lending, borrowing, capital markets, wealth, they're fundamentally the same. So I don't think you're ever going to really deviate from that. I would say, to take a phrase out of sports, it's a copycat league, right? So as one bank does one thing, and if it's successful, the other banks will try to do the same thing. I think we'll continue to see that probably for decades.
Lindsay was speaking with Matthew Lee, equity research analyst at Canaccord Genuity. Coming up, we're looking at why Canada's art market is expanding with our next guest, Rob Cowley. Stay with us. It is art auction season, and Canada is seeing a growing market for international artists like works from Vincent van Gogh and Pierre-Auguste Renoir. To give us insight on Canada's art market, we sat down with Rob Cowley, Canadian art specialist and president of Cowley Abbott.
With a Renoir right here beside us, which is being offered in our auctions tomorrow evening on Wednesday the 27th. So we're delighted to have this painting.
And where does this sit price-wise? What do you expect?
So the estimate on the painting is between $150,000 and $250,000. Comes to us from a private collection, a Canadian private collection. Delighted to have it. And again, one of the globe's best-known artists, of course, historically. So and a fine painting by him, a nice little painting by Renoir.
It is a beautiful painting, and it's sitting beside me. I'm not going to get too close to it. Bull in a China shop comes to mind. Let's talk a little bit about the art collection market in Canada. What is it like now? I mean, is that the norm, or is it across the spectrum?
Across the spectrum, and in fact, $150,000 to $250,000 right now is a great investment level for many collectors. We've had, sales even since COVID really have been excessive in Canada. The market's been very strong. Part of it's been driven by the quality and rarity of work coming to the market, both Canadian and international. We sold a private collection in 2022-2023 that grossed over $36 million, including works by Emily Carr that exceeded $3 million, works by the Group of Seven that exceeded $2 million. So I mean, some of the strongest seasons and highest records we've ever witnessed have been in the past 5 years.
Now, have Canadians suddenly woken to that it is an investment? I mean, you obviously, do you buy? Let me ask that question first. Do you buy art because it's beautiful, or do you buy art because it's an investment?
I think you do both. I think certainly what you do is you work with professionals, you work with advisors, you educate yourself as well. Certainly, there absolutely is a place for investment in the art market, and we're seeing it more and more. But you also want to make sure that you're looking at work that has an interest to you, that you're educating yourself. As I said, you're reading, you're speaking to specialists, and you're buying in the right areas, so that even a work by a named artist, you're looking at works of rarity and quality. They're going to hold value over time while you enjoy them, and hopefully even increase.
And so what's changed with the Canadians? I mean, you said the pandemic, but have they recognized it as an investment? And we're going to show, so here's some of the other pieces too. So you can answer my question and describe what we're looking at here too.
So what you found, honestly, Roger, in the past, certainly past 5 or 6 years, if we look at even the start of COVID, a lot of collectors and individuals had the time to spend connecting or reconnecting to their passion for collecting, and also looking at the money markets and seeing that, that the right opportunities often rival those markets, sometimes exceed those markets. And the work we're looking at right here, this is a very rare etching by Vincent van Gogh. This was produced in the last couple of months of his life. It is the subject matter is Dr. Gaucher, who was actually caring for him and provided him with the printing materials. But that is one of the most sought prints in the market globally. It's in versions of it are in MoMA and other museums like the MFA in Boston around the world, and a great example of 150 to 250,000 as well, and a great opportunity for a collector. Yeah.
And then we have a couple others here. I'm just loving. And so, what makes these so attractive to buyers? Is it the name?
It's the name, certainly, but also the quality, the rarity, the period. I mean, this Emily Carr canvas is featured on the front cover of our catalog. It's 1936 painting called Wind. This is exactly this kind of subject matter that collectors are looking for. It's valued at $500,000 to $700,000. It hasn't been on the market in over 80 years. It was once considered for purchase by the National Gallery of Canada while Carr was alive, and coming to the market for the first time. And with the strength of the market and such strong prices and opportunities, it continues to bring quality and rarity to the market, and that's what drives our market.
Now, there are obviously individual buyers who can afford these, and other people are looking going, this is out of my price range. Is there ways to buy art as a group? Or compete, like, are there like an ETF for art, something like that?
There is. More and more, you're finding that there are consortiums now, and even funds that do invest in artwork in a group setting. In Canada, that's happening more and more as well. And that also provides a real signifier to us in terms of the opportunity for collection and for investment. And you're finding that has only increased over time. The New York sales that just wrapped up, I think we saw $2.5 billion in sales, which was double last year. And again, driven by quality, driven by rarity, driven by opportunity for collectors, but you're finding all kinds of opportunities for all types of collectors right now.
And who gets to hold on to the piece of art if you're a consortium?
That is up for discussion, certainly. Oh, I'll talk about, there's the last work, actually. Yeah, this is Lauren Harris from the Group of Seven.
I love Group of Seven.
I mean, paintings like this is a Lake Superior scene by the artist. Works like this have exceeded $1 million in recent seasons, and this painting could certainly do that. A fantastic example by the artist. And one of those names, he was the first artist to sell for $1 million, $2 million, and over $10 million at auction in Canada. This is valued at $500,000 to $700,000, which I think is a great opportunity for a collector.
And what artists are hot or styles?
It's a wide range. In Canada, over the last 20 years, what you've witnessed is a widening of the market. So that certainly historical artists like the Group of Seven and Emily Carr have continued to be very hot. But also you have abstract artists like Jean-Paul Riopel and Marcel Ferrand, a female artist as well. And then contemporary artists as well, even artists that are living now. Works by Kim Dorland, Kent Monkman as well. So you find it's a very wide market. There's a lot of opportunity, not only in the major live auctions twice a year, but even online auctions where collectors can begin to collect even at below the $10,000 level. So it isn't just talking about six figures. There's an opportunity for collectors at most levels right now.
And from an investment perspective, what kind of returns is there? I mean, it's like anything.
Like anything.
Past returns do not guarantee future.
Exactly. I mean, we saw in New York this week, we saw some works that doubled in value over 5 or 6 years, quite honestly. And often it's quality and rarity that drives that opportunity. If we're looking at artists like Lauren Harris, when I started in the business 25 years ago, the record for a Lauren Harris painting was about $2 million, 2.4. Now it's over 10. So I mean, there's opportunities. Again, why you educate yourself, why you speak to specialists as well, who can help to guide you in those areas.
All right. And what do you like?
I like a
Just
bit
out of
of, I like
now
a bit of
just asking
everything.
out
I
of
love this
curiosity on this last
painting.
question.
This painting beside us, I absolutely love. I love the Emily Carr. I absolutely love the Lauren Harris as well. We're very, very fortunate. We get to spend time with all types of different works every 6 months.
And do you miss them when they go?
I really do. I was just saying before we started, you take it for granted a bit because you're working so hard and talking about them all the time. And then the auction takes place, tomorrow night, and they're all gone in the days to pass.
It was Rob Cowley, Canadian art specialist and president of Cowley Abbott. Let's take a quick look at the markets before we head out. And now the TSX having a bit of an off day after hitting a record high yesterday. Still above the old record from March, but below yesterday's high and off by about 6.6%. S&P 500 hovering around a high, as too is the NASDAQ. Could see some record highs depending on how it unfolds. And that wraps up this edition of Trading Day. Have yourself a great afternoon.